Thank you for tuning in to another edition of the Vulcan Report with yours truly, the Algo Capitalist. Hopefully everyone had a great weekend, and to kick things off for the trading week, today is Monday, May the 21st, 2018, and the stock market did rally. We did have some pretty good upward movement. Rally alerts continued, and the markets played out exactly as they were supposed to. Tomorrow, I'm expecting continuation patterns as the bullish trend is locked in, along with bullish sentiment and momentum, especially for the Dow and the S&P and the Nasdaq, and even the Russell. They're all locked in, loaded, and ready to go. Now, there's one exception, though. Let me look here. The S&P. The trend is bullish, but it has lost its the momentum is not locked in. So I got to put that out there. Momentum is not locked in on that one. And on the NASDAQ 100, okay, on this one, the trend is bullish, and for the most part, the momentum is not locked in on this one. It's actually negative momentum is locked in on the NASDAQ. This is interesting. But we do have an oversold condition. So this one is very interesting on the NASDAQ. Just the way everything is playing itself out. Let's start with the NASDAQ chart. Well, we got the Dow up now, so I'll just knock this one out. As you can see, it's market did pop just like I anticipated. I think tomorrow's going to be another day of rally, as we have a pointer here on the daily chart right here. I don't know if you can see it or not. We do have a pointer there. Let me see if I can pull that up for you. You can see it better. All right, so we got a pointer here. Market is broken out of the Kumo cloud just as anticipated. All right, so it's possible. I do think we're going to break out tomorrow. We got the gap to be concerned about. I say we probably will on Wednesday. If we don't do it tomorrow, then Wednesday the market will come down and deal with that. But as of right now, I don't think the market's going to deal with it tomorrow. I think it's going to deal with it on Wednesday. And it'll spike it down and then come back up again. So I think that's what's going to happen on that one. Let's see what else. That's about it for this chart. Let's go over to this NASDAQ. Because this one, the algos are giving off some very interesting vibes. Yep. Okay. All right. So the algos are suggesting that this bar here, along with this bar here, put the market in a oversold corrective position. And tomorrow the market is poised to break out of this. Now, rally alerts and crash alerts sometimes can lead the market 3 to 5 days out. All right, so gonna have to look at this. And on weekly charts, it's 3 to 5 weeks out. So right now, I have to say momentum at this point, at this hour, is absolutely flat on the NASDAQ 100. Absolutely flat. And volatility has quieted down. See, back here, we were all over the place, averaging 200-point ranges. Then all of a sudden, it started quieting down. So it's getting interesting. But right now, it's looking like the market does want to just pop. So this one is one to watch. Tomorrow, we do have a stop and reverse. If the longs are triggered, we have a stop and reverse. All right. So watch out for that one. All right, because there is an intraday price inflection point to get short tomorrow. All right, especially A, if the long trigger is not triggered, or B, the long is triggered, but the market runs out of steam and reverses and stops you out on the long, there is a an intraday short trigger on this one. So just the NASDAQ is one just to watch. I would just watch the NASDAQ tomorrow. I'm not looking to trade that one. The Dow does look very juicy though, based on what I showed you in the last bar. That one looks a lot better, and it is locked in. And the Russell is also locked in. Let me show you the Russell. We'll pull that one up. Don't usually show that one, but for today we're going to do that. If I can get it to come up right. All right, here we go. Fat fingers. Okay. So here's your Russell. Russell hits a new high. It hit a new high on the daily chart and the weekly chart. It's just on a tear. It's on a tear. It's locked and loaded. All right. Could see another little pullback, but right now the market has the momentum locked in. It's locked and loaded. So this one's looking juicy as well. All right, looking at the bond market. Bond market's been bouncing off that 140.05 low. And still poised to go higher. Looks like the market wants to try to reach the 142.10 resistance right here, the overhead resistance, before pulling back and the bears re-entering the market and selling the rally short. Taking a look at the US dollar index. It's also been on a tear. All right, pulled back Friday. Now, market's making its mind up. Does it want to push higher yet again, or does it want to roll over? All of my objectives have been met on the US dollar, so there's really nothing else for this market to prove. It hit the 94 handle just like I told you it would weeks ago. All right, so that has been accomplished. Now the market is probably going to fall down from here as it hits its head on the bottom of the Kumo cloud here on the weekly chart. It's been locked in, but I think it could roll over from here. All right, so just keep an eye on that. Probably want to watch UDN. For those of you that are subscribers to the weekly pulse wave price triggers, keep an eye on the UDN because it's been locked in on the bear cycle, but this could turn, especially if the futures does start to hit its head on the bottom of the Kumo cloud. This could take off, and then it'll be gunning for the old 23.27 high, and it could take that out rather easily. So just keep your eye on the dollar for now. All right, that's something to watch. All right, let's take a look at crude oil. Crude oil, as you can see, has been on a tear, 72.67. I told you that that's where it was going. I told you to look out for 70. It did it. I told you 72 was next. Boom, there it is. And guess what? The market is poised still yet to go higher. It's looking like this train is not going to stop until it hits 75. All right, or right close to it. It wants to go to 75, and then you might have a decent correction back down to about 70 actually. So 75, then it gives up $5, bases out around there, and then takes off to 80. So that's what we're looking at right now. If you want to document that, you want to write it down, I think the market goes higher from here. It goes to get to 75, correction around the 75 handle, back down to 70 before taking off and to the stratosphere. All right, that's the pattern for your crude oil. So you're going to want to watch DIG. That's ticker DIG. And you're going to watch USO and possibly UCO. Let me see UCO real quick. Yep, there's UCO. OIH has not really been participating, and I'm a little shocked about that. You got this, but for a while, usually this one is more in tune with the futures. But as you can see, it's just now breaking out of the Kumo cloud. All right, as compared to USO. USO is on a tear. See what I'm saying? Nowhere near the cloud. UCO on a tear. Nowhere near the cloud. DIG on a tear. Nowhere near the cloud. OIH. Technically, from here to here, from base to high is on the tear, but you're still in the Kumo cloud of death. And these are weekly charts I'm showing you, folks. You need these trend lines to break out of here. And I know there's contango issues when you're dealing with the OIH contract. I know that, blah, blah, blah. But still, you would expect it to move better and track better with the crude oil than that. All right? Even the crude oil futures is Kumo cloud's nowhere near in sight. All right? It's on the tear. See what I'm saying? So they need to fix that OIH. Do something with it. All right, here's gold. Now, I did warn you about gold. It's locking in on this bear situation. I fear it drops below the cloud, and I feel that we're going to go south of 1240 at this pace, at this stage. If this keeps up, 1240 will be in view in no time, and that drops below the Kumo cloud, okay? So far, first objectives have been met. I told you you were gonna see it heading lower, deeper into the cloud. That's what's been happening. And it's just a short right now. The bears have control of this market. All rallies are being sold. Based on today's activity, you could see the market fall back down next week. Depending if we go green this week, we fall down next week. It's just wash, rinse, repeat. You know, rally, sold. May rally again, then sell. You rallied, you sold. So that's kind of where it is. Rally, sell. Rally, sell. And it has not been able to break that cycle. It broke out of the consolidated range, but only to head south. Same thing with silver. Silver's still in a downtrend channel, caught in a sideways consolidation pattern, but it's still in a downtrend channel. So you're expecting sideways to slightly lower prices until it can break out of this cycle. All right, and that's pretty much it for now, folks. Remember, pulsewavetrading.com, where you can sign up to receive the weekly PulseWave price triggers delivered into your inbox on a daily basis. We cover futures, we cover Forex, we cover the cryptocurrency space, all exchanges on every continent, every stock exchange. Get the rally and crash alerts delivered to you daily. Know when a market is turning, when it's about to break out or break down. Everything I cover in these videos, plus a lot more. We added the stop picker indicator, basically knowing where the intraday price inflection points are going to be, and that's where most of the stops are hidden. So instead of the large institutions running your stops, you get to run theirs. So it's a very slick mechanism that we use, and it works like a charm. So come see for yourself. PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.